Mr. Wealth Answer here. In today's video, guys, I'm going to share with you a strategy you can employ in pocket options for you to get actually a very good win rate and make some money. For those that are just getting started in trading, hey, I've been there. I've been confused. Trust me, I know exactly how you feel. So I wanted to create tutorials and videos to share with you my journey, but most importantly, share what I'm learning and how I'm able to make consistent profits on both Forex and binary options trading. Before we even jump into the pocket options chart, I'm going to share with you the exact strategy. I have a Google Doc that I created. The link for that document will be in the description down below. So if you guys want to actually get access to it and use this strategy, you're more than welcome to. It's completely free and for you to use. Some of you guys want to make some consistent income online. I think pocket options is one of the easiest ways to get in, and I've created a strategy that will help you to be consistently profitable. So let's jump into that Google Docs and let me share with you exactly how this strategy works. This strategy, I'm just going to quickly read through it so you guys get a better understanding. Then we're going to go to the charts and I want to show you exactly how to set it up and everything. This strategy I like to call the reversal strategy. The chart type is Japanese candlestick. Time frame is on a 1 minute time frame. The expiration time is 2 minutes. All right, so here are the instructions for this strategy. You can adjust the expiry and time frame based on market volatility. For slower markets, use a higher time frame to analyze the market, for example 5 minutes, and you can increase the expiration as well between 3 to 5 minutes. So if it's a slower market, use a higher time frame and use a longer expiration time frame because the market's moving really slow if it follows these rules. So just be cognizant of that. If it's a very volatile market, then yes, you could use the time frames that we have illustrated over here. All right, so what's the strategy? Well, the strategy is very simple. When the market moves into the overbought and oversold positions on the Bollinger Band, outside the bands, the zigzag indicator is pointing to the highest peak of that trend and the stochastic oscillator is in the overbought or oversold position, then look to take a position. To minimize fake reversals, it's good to wait for the candle to form in the direction of your reversal. So for example, if it's in an upward trend, it's good to wait for the bearish candle to form, and if it's in a downward trend, it's good to wait for the bullish candle to form. As a side note, you won't win every single time, but this strategy actually has a very high win rate, guys, in the regular markets and as well as the OTC. My personal best results are when I use these conditions, the overbought and oversold positions, on a 5 minute time frame with a 2 minute expiry time. To further strengthen your position, trade off a strong support and resistance zone, and also a reversal in the direction of the trend increases your odds of winning as the momentum is in your favor. Now, if all this sounds a little bit gooey to you and you're new to trading, don't worry, we're gonna go to the chart and I'm gonna see if I can get a couple of examples for you to kind of illustrate my point. Okay, so here are the actual settings of the indicators we will use. We're going to use the Bollinger Bands, we're going to use the zigzag indicator and the stochastic oscillator. And we are going to basically go to the chart and I'll show you the inputs, but I've also put it here so you can just copy the inputs from here. And then lastly, I want you to remember these points as well. In every video, I will continue to remind you guys that it's very important to identify what market trend you are in. If it's an uptrend, downtrend, sideways trend, very important. It's also good to trade in the flow of the market. If the market is a very strong uptrend, I recommend to trade in that trend. Use proper risk management. In other words, don't overbid. Don't put more than you're willing to lose. Make sure you control your emotions, your fear and greed, because it does play into profitability and consistency when trading. Don't force your trades. If you trade and you see the market is not conducive to this strategy at that time, then either change the asset you're trading, right, the instrument you're trading, or change the strategy or stop trading altogether. Also know your trading basics. It does help. So everyday practice, guys, learning the fundamentals of trading, get the foundations even as you're new, because it's going to help you become a better trader in the long term. It also helps you to read much better what the market is doing. So there are free courses which I illustrate down here below that you can take, and we have our course as well. Right now as I'm speaking, it's free. However, we are going to put a price tag to it because we are going to add a lot more value to it. And of course, you know, because we're adding a lot more value, spending money on it, we are going to actually put a price tag. So if you're watching this video, grab it now before we do that. Another thing I want to encourage you guys to do is before trading, set a goal, set a stop loss. I know binary options, you don't have stop losses, but set a goal on how, like, what's the minimum you're willing to lose that day before you stop trading. So if you lose that amount, that's it, you stop trading, you're done for the day. Make sure you have that number in hand. If you don't, you could end up blowing in your account and getting emotional about your trades and end up trying to revenge trade and trying to get back all the gains right away. And if you do that, there's a higher probability you're going to lose your money. And next thing I want to encourage you guys to do is also track your trades, and then practice on a demo account before trading on a real account. So all my tutorials, I will be practicing on a demo account because I want you guys to get used to practicing on a demo account and then transfer it onto a live account. And this is going to greatly help you guys down the road. Trust me, it's great to trade on a demo. Even before I get into the markets, I like to test to see how the market is for that specific strategy, and if I see that it works well on a chart, then I jump on my live account and make some trades. It's actually a strategy I use to make sure that the market is okay for me to trade. Rather than risk real money to see if it's okay, I actually do a demo. Another option is to just risk a very small amount, maybe $1, $2, just to test the market to see what is going on. All right, and then lastly, we have our pocket options. If you haven't signed up, link is also in the description down below. You guys could click the link, sign up. We have a promotion code, and then we have our course you can grab. And I recommend babypets.com for the basic trading education, which is completely free to help you so that you can become a better trader. All right, guys, so that's it for this part of the video. Let's jump to the charts now and let's see if we can pick up some trades. So we are in the pocket options chart, and as you guys can see here, we have the indicators all listed, and I'm going to quickly click it so you guys can see all the settings that we have in that document is here as well. You could pause the video and also get the settings as well. So I'm just going to go through it quickly. Pause the video for you guys to grab it, and we have the stochastic oscillator here, and here are the styles. So we've already gone through the settings. Again, those are the complete settings. It's down in the documents, or you can just pause this video and grab it. So now that we have our settings in, let's now make sure we jump to a 1 minute time frame and 2 minutes here. So I do want to jump. For me personally, I do like to see the momentum of the chart. This is a good trade here to see C's coming down would be a very good trade. So as we're doing this, let's just put it and see. Now it could continue going up, but sometimes I do like to go on a higher time frame. And yes, this trade is a bit risky just because on a higher time frame you can see it's wanting to push up, and it's hit the moving average here, so it's fluctuating back and forth. If we do lose this, it's okay, but I want you guys to get the drift. So on the 1 minute candle, it's looking like it's pulling back and it's going to reverse back to the moving average on that time frame. But when you go on the higher time frame, you can see that there's a lot of movement here. You can see that it's gearing up towards this moving average here, so there is a probability that this will continue to go up. Let's just go back to an hour time frame. Now here you could see that, you know, it's on a little bit of a sideways market here. It's broken this level and it looks like it wants to go up. And if we come here on a 1 minute, actually before we do that, let's jump on a 5 minute time frame, one of my best time frames, and you can see that it's almost at it is at the overbought position here. So I do anticipate it to kind of reverse back down here. Now we can wait until red candle forms and closes on the 5 minute time frame and then choose a position going down, and sometimes I do that as well just because it's in a very strong uptrend and it's going to have a pullback and a reversal to this moving average. We most likely may not get this trade, but let's just see what happens. We have 24 seconds left. All right, so we didn't get this trade, which is fine. It's part of trading. Again, when I analyzed the chart, I saw that on the higher time frame, it still had momentum going up. So for this type of situation, I tend to like to see a red candle form and close on the 5-minute time frame. When I do see that, then I take a position going down. Like right now, it's starting to go down. So let's just wait and see. We may take another trade here. Let's just wait for it to close. It hasn't yet closed on a red candlestick. So let's just wait. If it closes on a red candlestick, we'll take a trade position going that way. You can see here it's overbought on the stochastic oscillator. It's showing us that it's overbought, and you could see that the blue line is crossing the orange line and the trade is coming down. So this looks like it may come down a little bit more and it might reverse back. We'll see, but it looks like it's a very strong uptrend. So for me personally, it's a semi-risky trade, but most likely you will be able to get one or two in this type of market. Keep in mind the markets are closed. It is evening time. It is a lot less volatile, and it's the OTC market, so there is some manipulation here. But at the end of the day, it's not like you can't make money. You still can make some trades. You just got to pick your spots really good. So this instrument right here would have been a very good one. If we had probably entered here, we would have caught it here, but it's not a lot of volume for me personally. So I really don't like the way the candlesticks are forming. There's not a lot of movements in the candlesticks. So I most likely, oh, by the way, this did close and we missed that entry. We should have entered here when this had closed. So let's see if I could enter. All right, so we'll enter here. As we saw a couple of the candlesticks close, let's enter and let's see the results. All right, so we have 10 seconds in and we should get this one, but it's very close, and I think we got this trade. Boom. All right, so that was a good example of this trade in action, and as you can see, it's now gone to the oversold position here, so you can anticipate it coming back up here. Again, guys, this specific chart looks like it's on a very strong uptrend. On a higher time frame, it looks like it wants to go up. So when you're trading a reversal pattern, always keep that in mind, because if you're going to go against the trend of the candlestick, especially in the OTC market, you got to make sure your entry point is on point. So we got it after we had a close in the red candlesticks. We actually got in, I believe, on the third one, but we should have got in once this one had closed. Now there is a probability that it could continue the other way, but from my experience, it always wants to come back to this moving average before it pops back to the other direction. And because I have that sense and I've seen it time and time again, it gives me a good entry position once this candlestick closes. And so it's very important to kind of understand the candlesticks and what's going on. And also we have this little kind of doji candle here where I believe it's a dragonfly, where it looked like the market wanted to go up and pushed it down and closed here. It's a good indication that the market is going to go and reverse back in the other way. So studying your candlesticks is also a great way to kind of help you gauge what is going on with price action. And if you're able to kind of gauge the movements, you'll be able to enter some very solid trades. Now my goal isn't to turn $100 into $4,000. My goal isn't to try to impress you how you turn $50 to $10,000. But my goal in doing these tutorial videos is to give you trading knowledge and understanding on how to be a consistent and profitable trader. Things that I'm learning that is helping me, things I'm seeing from others, and things that I know will help you consistently grow your account over time. This strategy really does work. If you're patient with it and you practice more with it, you will make a lot of money. All right, so let's just look for one more example so I can give you guys an idea of how it works again, and then we'll end this video. So let's look for another example. All right, so I went on this chart, and as you can see, this is almost an oversold position, and it's not really at the oversold position here. so there'll be a risky trade. Plus it's in the moving average, it could go either way, so I would not make a trade. By the way, I forgot to add the fractals. This actually helps you to determine the trend that the candles are flowing in. So if it's pointing up, that means the market, it's most likely might go down. And here you can see it's pointing down, looks like it might go up. And you see this one just formed, so it means it is going down as well. So this also helps to kind of gauge where in the next minute or two where this candlestick is going to form. And because we've chosen a period of 2, meaning the last 2 candlesticks, this is like an indication of the last 2 minutes. And so in the last 2 minutes, it's showing us that the market is piercing down towards a downward trend. But there's other things that you should consider as well. It's not always accurate, it just gives you an idea. But for me, I like to see this, especially on an overbought, oversold area, heading in the direction of the trend. Usually those trades have a high probability of winning for me. Okay, so this one looks like a good one. This looks like it is going down on the 5-minute time frame over sold area here, so it most likely will go up. And let's go on a 1-minute time frame and see what's going on. So on a 1-minute time frame, it has gone down quite a bit and it continues to go down. Let's wait till a green candle forms and closes. Once a green candle forms and closes, we will enter this trade. Now keep in mind, if we go on a higher time frame, we can see that it's heading into a down direction. So just be cognizant of that. And I also like to see any kind of points of resistance. And here would be one, and it hasn't reached that level, so it might want to get to that level. So you just want to be careful of that. So let's go back to 1 minute, and you could see this now is starting to go up. So we will continue to wait until it closes. And if it closes on a green candle, then we will enter the trade. Okay, we're gonna enter here. Looks like a very strong bull candle. So let's just see how this trade unfolds. All right, so we just passed the 1 minute mark. If we had chose a 1 minute time frame, we would have won that trade. So let's just see if 2 minutes is good enough to win it, and let's continue to wait. So let's see. It's coming down drastically. 10 seconds left. It's going to be a close one, but as you guys can see, the strategy is good. Sometimes you win, sometimes you lose, but it looks like we got this one. Awesome. So we got 2 in a row. We did 3 trades, we got 2 in a row. By the way, I forgot to also let you know of the zigzag. So the reason I have the zigzag is it helps me to determine when is the trend strong. So when I see this go all the way to the bottom, and I see that, because the zigzag only comes when it reaches the lowest point on the chart. So I like to see the zigzag, especially at a point where it hits the low or the high on the stochastic oscillator and close to the Bollinger Band. So this would have been a very good point. Of course, always wait for the green candle to close, and this would have showed me this is the lowest point. And so if the market kept going down, then it will be another lower point. But this would have showed me that it's a very good entry for a buy reversal, because there's no other point that is lower than that. So it hit a lower point on the oversold area, or close to the oversold area, with the stochastic oscillator. Plus this fractal showed up at the same time, indicating that the trend is going to go up. I waited for this to close, I entered, and as you can see, it was a win. So I use these indicators to kind of help me gauge what the movement of the market is and when is the best time to enter. So I hope that makes sense, right? So I reiterate that for those that are watching so that it can be crystal clear. All right, so with the Bollinger Bands, we set it up in a way where this is the moving average, and these are the deviations, standard deviations from the moving average on the Bollinger Band. And so what happens is, if it's over here, that means it's overbought, and if it's under the Bollinger Band or close, it's oversold. So we want to kind of enter in the overbought and oversold regions in order to anticipate a win. Now, to help us to further solidify that entry, we use the fractal to help us with the direction. So the fractal appears whenever there is a change in direction, and you can see it appeared here where it's going down. So if it's pointing up, it's going the opposite way. That's the best way to remember it. And I use the zigzag to kind of help gauge where's the lowest point on the current trend, so that it helps me to determine a better entry point. So the zigzag is very helpful, and with all these indicators combined, it gives me a good indication of confluences that I should use in order to enter and in that trade. If this video was helpful and you like the content, don't forget to subscribe, hit that notification bell, and join this channel, because there's going to be a lot more trading tutorials coming your way, and I'm going to be sharing a lot of strategies with you guys. With that said, underneath in the description down below, there is our free trading group. Don't forget to join, as well as our binary options course. Grab it, where it's going to teach you how you can turn $100 into a 4, 5, or even 6-figure monthly income on pocket options.